Alright traders, I am back again with another video, and in this video I'm going to take a look at the Bitcoin US dollar. Not a lot going on, but there is a possibility for a possible bounce off of a support level. Now basically, you guys know that I use Ichimoku a lot. That's what you perceive me to be doing most of the time, but Ichimoku is not the only thing that I use. So fractals are one of the bigger things that I use in my trading. Also support and resistance and price action. So Ichimoku's not always giving me a detailed analysis of the chart, so I really can't tell sometime what's happening with Ichimoku, because sometimes the market is just flat and ranging. Now I could see there's some things here. Basically this big thick cloud shows some volatility, so you can see we have that here, and you can see we're in a flat range right now. So pretty much Ichimoku's not helping me. Now there are some signs that let me know that we have some strong support and resistance levels based off of the cloud. So we have some resistance off of the cloud. So I think we have some levels where we could really pay attention to and look for the market to move and bounce off of. So I'm going to put a couple lines here. This is going to be a level here because there's some upper resistance level, and then we want to put a support level where the next support level is, because currently we're sitting at a support level. So I'm going to hide this Ichimoku for a little bit. Alright, so we're going to hide that because basically we're trading inside of one candle, really inside of one candle for quite a while. So there's opportunities for trades there. I'm going to mark this level for you. So first of all, let's see where the support and resistance level is before we get started with that. So first of all, you can see the market. I marked that upper level and this lower level, but we're sitting on this level right here at about 35.59. Alright, at that level you could see this bounce here of support, a bounce of resistance, a couple more levels of support where we held really strong. Now let's go back to Ichimoku here. So what scares me with that, and I don't hold much weight with Ichimoku when we're in a flat market because anything could happen, but it kind of lets you know some things here. You could see we have resistance from the cloud, so I don't think we're going to see the market get too much higher than where we can go here, but we can trade this right here because we're inside this box. So we're going to box this market in. A lot of times when I don't know what the market's doing, I'll just box it in. So I'm going to show you also, if you look, we got a couple crossovers. When you get this too many crossovers developing and it got a flat Kijinsen, flat Tenkan-sen, you have no momentum, and you really don't trust these levels for support and resistance. Alright, so I can't really trust these levels for support and resistance. This crossover here, we would thought it was support, and it did hold right there, and then the market came through, found a real support level down here, and then now it looks like this is resistance. So even though if we're going to say it's resistance, we have no momentum based off of the daily, alright, because you're flat on your Kijinsen, you're flat on your Tenkan-sen. You never want to be flat on Tenkan-sen. That means the market has totally died out on you, so you don't really have anything happening there. So I'm going to take Ichimoku off the chart again. We're going to hide that. And we're going to just look at this level right here. As you can see, this is a major level where we want to probably have an opportunity to catch a trade. Now I'm using Williams percent R. I'm using it on the 5-period setting, okay? And I'm going to show you what I'm looking at basically. So we're inside this one candle. I'm going to mark that candle. Alright, then I don't want this to be so dark, so we're going to change this a little bit. It's a little bit too dark. Alright, we don't want it to be that dark. So that should do it. That should do it. Alright, so we're inside this box here, and I can mark this a little bit better. And then we're going to go to the 4-hour time frame. So remember this level, that's important for us, 355.9, 3559. So then when we go to the 4-hour time frame, this is what we want to really look at. So the box is showing a little bit lower level here. Now I could bring this up right to that support level, basically a little bit lower than that support level. So we have that support level at 3559, but you also see where the box is here. Now the major thing is that box level is sitting at about roughly 35.20. okay, so what you saw there was a good rejection here. The market rejected this level, rejected breaking lower. It portrayed to go lower, but it failed to break through that level, and then the market just stayed up and then finally went up to near the top of this range here, and then we come back. Now we're sitting close to this support and resistance level. I never like to trade the ranges in the middle. I really want to be right at these levels or close or right at this level, because no telling what could really happen. Now if the market stays closer to the support level, then you're probably going to see a lot of times the market breaks out because it's failing to even push higher. A lot of times if it's up near that upper level, it's going to be the same thing. So we're down at this support level, and I still would be looking for a trade opportunity for a long trade, because we've been trading back here in this range pretty much. Even if I go back here further, all right, once we broke inside here, that was on January 10th, the 10th of January. So basically we've been trading inside this for quite a while. All right, so looking at that, it's the 26th now, so 16, pretty much 16 days been inside this box here. So the thing that we're going to look at, we bounced off a top, bottom, top, back up the top, the bottom. Now where are we going to go? I think basically if I could have caught this down here, I would feel comfortable catching a trade down here, because I limit my losses. So the more you get into the level, all right, your risk increases, because your stop loss has to increase. I mean, if you got a stop loss below, let's say you're below this point right here, and you're going to enter right here at this level at what I have here at 355.9. If you're going to enter at that level, your stop loss isn't as big, but as the market moves higher, it's bigger. You wouldn't move your stop loss higher, because basically if the market came to that point, that's the level where the strong support and resistance is, and it could come right back to that point. So you would never move your stop loss up. You're basing your stop loss off of your analysis. Now this whole chart, you could see where the levels really were, and that's where the market could come down again and spike. Now we want to see, that's why I don't like to trade in the middle or off of my level. I want to be as tight as I can, because that limits the risk. So we're going to wait to see if the market gets back to this level, what it does when it gets back to this level. You got some minor resistance ahead of us right here, so we might be able to see the market drop back down, hit this level, and then this is where we're going to get our chance to trade long. So what I look at with this Williams percent R, a lot of times it'll signify to you what's pretty much happening with the market, and it'll help you to get into some trades. Looking at when the market is trending to the downside or to the upside, you're going to use this. And I don't trade when it breaks below. I trade when it breaks above, because that's when I'm looking for my trade. All right, now it looks like everything's been pushing to the downside. You had this break here, and then the market dropped. We want to see this. When I get down to this support and resistance level here, I like to see this Williams percent R below that -80, and then when it breaks that -80, that's when I'm trading, because the market that's starting to show that the momentum is starting to build to the upside. Now you don't have true full momentum at that point, but that's when it's starting to build, and then the next thing you know, you start to see that move to the upside. Now I'm not going to look at trading anything until I get to this level, so I like to have my trades precise at a level where I feel comfortable and I can manage my stop loss without too much risk, right? So you probably want to wait here and see what we get here, all right, for the opportunity for the market to give us an opportunity at this level. All right, so currently I'm just going to wait. I like to go down to the lower time frame. I'll look at the daily to get my bias, build it all up. So then when I looked at that daily, this is where I got my support and resistance levels from. This is where I saw the range pretty much from. And then when I went into the 4-hour, you could see the better range and the better levels here. All right, so price action pretty much gets you in the trades pretty much. You could see a big rejection here. You kind of know what's going down with the market. Now you had a rejection here. If you had taken this rejection, you would have lost on this move here. This big spike right there. Then the market did go higher, came back to that support level. It's bounced on this level a few times, and we want to get right back there, look for that trade to the upside. So that's what I'm looking at with this BTC USD. Not much happening at this point. Just got to be patient. Trades aren't always there. You always got to sometimes just sit and wait. You got to be like a sniper. You wait till that thing comes to where you are and you could see it, get it in your scope, get it in your view, and then boom, that's when you pull the trigger. You're not going to pull the trigger when you can't see it clearly, and you cannot see this trade clearly yet, because this could go anyway. Even when it's at support and resistance, it could go anywhere, but once it's at support, that gives us a higher probability. When it's at resistance, we got a higher probability. At this point, the probability is a little bit lower, and your risk is a little bit more. So that's the things you want to eliminate out of your trading. Eliminate those things will help you to be a better trader. Learn how to eliminate some risk and how to get higher probability, and that could help make you a better trader. Along with your mentality, that's what's going to also help you. You know, your mentality, that's going to be a big thing, because traders can't be patient, traders aren't disciplined, traders break rules and so forth. All right, so this is one that you want to be patient on. Don't break your rules, sit here and wait, let it come down to this level, and then we're going to get ready to pull that trigger. All right, so I'll keep you updated on this, try to keep it updated on the website. If you join my website, you don't have to even join as a member, just come subscribe, and then when I send out new content, you'll get a newsletter and let you know what I put out. And if you want to be able to see some of the new courses I'm putting out, some of the things that are out there, some of the videos, just subscribe to my website. Come over and visit me at www.fxatOneglance.com and register just to be receive my newsletter. All right, guys, hopefully this helps you out a little bit. Nothing there right now. Sometimes we got to be patient and wait, and that's what we're going to do. All right, so till next time, have a great one, traders. God bless. So long.